Thank you for joining us at exam.com for today's Daily Market Comment by Haralambos Pisuros. I'm Christina Marujos. Although Euro traders were not overly impressed by yesterday's preliminary PMI data, suggesting that the Eurozone returned to growth in January, the contrast to the U.S. numbers that came out later in the day may have allowed Euro-dollar to stay in uptrend mode. Both the manufacturing and services U.S. PMIs improved compared to their December prints, but stayed in contractionary territory, suggesting that business activity in the world's largest economy continues to shrink. This is another set of economic numbers confirming investors' view that the Fed may need to deliver smaller rate increases henceforth, and that 50 basis points worth of rate cuts may be appropriate by the end of the year. Conversely, market participants remain convinced that the European Central Bank will continue with 50 basis points hikes at each of its next two gatherings. This could continue benefiting Euro-dollar heading into next week's FOMC and ECB meetings. After breaking the key 108 zone on January 12th, traders of this pair may be determined to continue marching north and perhaps challenge the 111.75 zone at the not-too-distant future. The Australian dollar jumped today after data showed that Australia's inflation accelerated by more than expected in quarter four in both headline and underlying terms. The headline rate hit a 33-year high, adding to the case of more rate hikes by the RBA. Combined with the optimism surrounding China's reopening, this is likely to keep Aussie dollar in uptrend mode for a while longer. The Canadian dollar will likely enter the spotlight later in the day as the Bank of Canada holds its first monetary policy meeting for 2023. Investors are pricing in a nearly 75% probability for one more but last 25 basis points hike, with the remaining 25% pointing to no action. The Canadian dollar could strengthen if indeed policymakers decide to press the hike button, and it could gain even more if they consider that more hikes are needed. Wall Street traded mixed yesterday, with the S&P 500 and Nasdaq closing in the red after a rocky session marked by mixed earnings and a technical malfunction at the opening bell. The Dow Jones managed to eke out some gains. The main driver behind the slide in the S&P 500 may have been the losses in industrials, but Microsoft gave the index a helping hand in extended trading, with its stock gaining more than 4% after the tech giant announced results that showed some strength amidst a weak economy. This was a Daily Market Comment here at exam.com.